This is Nightly Business Report with Bill Griffith and Sue Herrera.
Big gains. The bulls were in control of an often choppy quarter as stocks enter what is typically one of the best times of the year for the market.
New hope. The FDA approves a new drug for migraines, creating a potentially lucrative market to treat a major source of pain.
Wireless revolution. Why Verizon hopes it's on the verge of ushering in a new era. Those stories and more tonight on Nightly Business Report for Friday, September 28th.
And we do bid you good evening, everybody, and welcome. So here we are at the end of the week, the month, and the quarter. And what a 3 months it has been. It turned out, get this, to be the S&P 500's best quarter in 5 years. And it registered new highs along the way, with investors cheering a rise in profits and a strengthening economy. But on this final trading day of the quarter, stocks were little changed. The Dow added just 18 points, closing the quarter at 26,458. The Nasdaq was up 4. The S&P was up down a tiny fraction. But check out the gains for the quarter overall. The Dow was up 9%. The S&P and the Nasdaq each up around 7%. Of course, the question now is, will this momentum continue through the fourth quarter? Mike Santoli takes a look now at what may come next.
Wall Street's bulls are making the turn into the fourth quarter in good stride, but they're being chased by a set of nagging concerns that have pursued them for most of the year. The S&P 500 finished the third quarter with a gain of more than 7%, which leaves the benchmark up by more than 9% so far this year. This puts the market on a pace for a better than a 14% return, including dividends, for all of 2018. The market strength is supported by a U.S. economy growing better than 3%, corporate profits rising near a 20% clip, and interest rates that remain at historically low levels. Technology, retail, healthcare, and transportation stocks were standouts over the past few months, offering a fairly encouraging picture of the underlying economy. So what is there to worry about heading into what is typically the strongest quarter of the year? Well, the concerns are in a few familiar areas. Has growth peaked for the U.S. economy or certain sectors, as the market seems to suggest? Will more intense trade disputes with China upend global growth and further stress international markets? Do the midterm elections present any risk to the business environment? And how might the Federal Reserve's rate hiking campaign heading into 2019 restrain the economy just as the boost from last year's tax cuts wanes? The bull market is showing some wear and tear that reflect some of these worries. Home building, auto, bank, airline, and semiconductor stocks, all viewed as economic bellwethers to some degree, are struggling well below their highs, despite the S&P 500 sitting within 1% of its record level. Warnings about earnings shortfalls from big companies are at the highest level in more than a year, and profit forecasts in 2019 will be tougher to beat than they were this year. These are all the kinds of concerns that crop up in the later phase of an economic cycle. But of course, no one ever knows for sure how close to the end of a cycle we are. What's more, investors have lived with these perceived threats all year, and that has not kept the stock market from climbing the so-called wall of worry. For Nightly Business Report, I'm Mike Santoli.
So let's turn now to Lisa Erickson for her fourth quarter market outlook. She is the head of the traditional investment group at U.S. Bank Wealth Management. Nice to have you with us tonight, Lisa. Welcome.
Thank you.
I think Mike pointed out some of the dangers, if you will, to the market, and you agree from my notes to some of them, but you basically think that the fundamentals of the market remain intact.
We do. We actually have a continued cautiously optimistic look for the U.S. equity market for the fourth quarter, and it really is based on good, solid fundamentals. If you look at the economic picture, and we track an ongoing dashboard of economic indicators, 2/3 still remain in positive territory. So you're seeing good support generally from what's going on in the broad U.S. marketplace. And in addition, if you look at the corporate earnings picture, the earnings estimates continue to remain very good for corporate America, staying around that 20% level going into the end of the year.
Right.
So we really believe both of those factors will continue to support the market.
But if you had to rank the headwinds that Mike was itemizing there, what do you think are the biggest threats to this market, whether it's the Fed raising interest rates even more or trade tariffs continuing? I mean, what are you worried about?
Well, one of the key concerns that we have is really on the inflation front. Our base case is that inflation stays modest. Again, we've had a nice growing economy, but not at excessive levels. So there's no reason to believe that inflation will suddenly spike up. But if it is higher than expected, that certainly could be a deterrent to the economy. And I think another key is really just policy mistakes. While, again, the Fed and central banks around the world have done a great job keeping their hands on the tiller, they are moving from a position of unprecedented monetary easing. And so it's just going to be a little bit more difficult for them to navigate that going forward.
How would you rank geopolitical risk?
Well, geopolitical risk is certainly up there as well, so I'm glad you brought that up. And in fact, that's one of the reasons why we would say we're cautiously optimistic as opposed to flat out optimistic. There are certainly a number of hot spots around the globe that could impact the growth picture or the inflation picture, and so that is certainly a consideration.
Well, let's make this meaningful to investors. I mean, when we ask money managers and others their favorite sectors, usually we get technology, usually we get, the industrials right now, the internationals. Who do you like right now going into the fourth quarter?
Well, in the U.S. equity market, we do have technology on our list in addition to consumer discretionary. And the reason why is in a moderate growth environment, we think investors are really looking for that extra ounce of growth that they can get. And certainly both of those sectors within certain sub-industries and specific companies really have the opportunity to take advantage of change that's going on. Certainly technology is a bigger part of our lives in many ways, both in the business world and for individual consumers. And certainly in consumer discretionary, there's a lot of change going on. So we believe there's some nice trends that individual companies can take advantage of.
On that note, Lisa, thank you very much. Lisa Erickson with U.S. Bank Wealth Management. And later in the program, our market monitor will join us and tell us which stocks he thinks are the best bets for the fourth quarter.
In the meantime, Dow component Walgreens is paying nearly $35 million to settle charges of misleading investors on financial targets. The SEC alleges in the complaint that the company's former CEO acted negligently in giving financial estimates 6 years ago when it announced that merger with Boots Alliance. As is customary, as part of the settlement, Walgreens neither admitted nor denied the allegations. The stock was down more than 1% in today's trading.
Fellow Dow component Pfizer received FDA approval late yesterday for a lung cancer drug. The medicine is a once-daily oral drug to treat a rare form of the cancer. Lung cancer is a leading cause of cancer deaths. Shares of Pfizer rose a fraction in today's trading.
And Eli Lilly also got the stamp of approval from the FDA, this one for a new class of migraine medicines that offer new hope for the millions who suffer from those debilitating headaches. Shares of Eli Lilly rose on that news. Meg Terrell takes a look now at the big money in this growing market.
Migraine sufferers know that the painful episodes are more than just headaches. They bring severe throbbing pain, often accompanied by nausea and extreme sensitivity to light and sound. There are now 3 new options for migraine prevention. The FDA approved Eli Lilly's drug Emgality late Thursday. It joins similar recently approved treatments from drug makers Teva and Amgen.
We know that there's over 30 million adult migraine patients in the United States. And if you look at that, only 10% of them are on preventive migraine agents because there hasn't been a new medicine in over 2 decades.
Migraine patients have typically been treated with older generic drugs, often repurposed from other uses. The wrinkle shot Botox is also approved to treat chronic migraine and brings in about $600 million in annual sales. The new medicines are all in the same class, blocking a molecule known as CGRP that's elevated during migraines. Each is given as an injection once a month. Teva's can be given once every 3 months. While the drugs don't prevent all migraines, they did prove in clinical trials to reduce the number of attacks per month. They all cost the same, too, at least on their face, $575 a month or $6,900 a year. But Wall Street analysts expect major discounting to win market share, and already the companies are offering incentives. Amgen, which reached the market first, offers the drug for a $5 monthly copay for some patients and gives some drug away for free. Teva also offers copay assistance so patients may pay nothing out of pocket. And Lilly says some patients may receive its drug for free for up to a year. All in, Leerink analysts estimate the medicines could draw as much as $6 billion a year by the mid-2020s, a large market for a major source of pain. For Nightly Business Report, I'm Meg Terrell.
And now to a follow-up of a story that we told you about yesterday. Tesla. Shares of the company dropped sharply today following SEC charges against CEO Elon Musk that he made misleading statements about taking the company private. Tesla shares were down nearly 14%. Phil LeBeau has more on the legal fight facing Musk and his auto company.
Elon Musk finds himself in a fight with the SEC that could cost him his job running Tesla. The Securities Exchange Commission accuses Musk of making false and misleading statements when he tweeted about taking Tesla private with funding secured. He never had a deal locked up.
We allege that Musk's statements were false and misleading because they lacked any basis in fact.
Musk calls the charge unjustified and says he's always acted in the best interest of investors. Now those investors are wondering about Musk's future, since he reportedly balked at a settlement with the SEC that would have allowed him to stay on as CEO. With that deal dead, the SEC wants to ban Musk from running any publicly traded company.
If the SEC is willing to agree to something less, the case is probably resolvable. But, if he walked away from that, you're probably right. He might not be willing to agree to anything reasonable.
For its part, Tesla's board of directors, which includes Musk's brother, says it supports the embattled CEO.
This puts a lot of pressure on the board. The board's responsibility is to delegate to management, not to enable management.
This SEC case comes just days before Tesla is due to report third quarter sales, and many believe those numbers will show the automaker making steady progress that is now overshadowed by a huge and potentially costly fight between Musk and the federal government. Phil LeBeau, Nightly Business Report, Chicago.
Time to take a look now at some of today's upgrades and downgrades, and we begin tonight with Lowe's. It was upgraded to a buy from hold at SunTrust. The analyst cited the company's current turnaround plan. Price target now $138. The stock rose a fraction today to $114.82. Devon Energy was upgraded to overweight from neutral at Piper Jaffray. The analyst there cited the company's free cash flow into next year. Price target now $53. That stock gained 1% to $39.94 today.
NVIDIA's price target was raised to $400 at Evercore ISI. That's the highest on Wall Street. The analyst cites the chipmaker's leadership in artificial intelligence. The firm maintains an outperform rating on the stock. The shares gained 5% to $281.02. Phillips 66 Partners was downgraded to underweight from equal weight at Morgan Stanley. The analyst cites the stock's valuation. The price target is $50. The stock was up just a fraction to $51.14.
Still ahead, a security breach at Facebook that's affecting about 50 million accounts.
A government shutdown, as expected, has been avoided. President Trump signed the $850 billion spending bill that will keep the government open through December 7th. The legislation funds the military and several civilian agencies.
Facebook said today it has discovered a security breach that has affected almost 50 million of its accounts. The company is still investigating this issue and has yet to determine whether the accounts were misused or whether information was actually accessed. But Facebook says the hackers exploited the so-called View As feature, which has now been fixed.
I'm glad that we found this and that we were able to fix the vulnerability and secure the accounts. But it definitely is an issue that this happened in the first place. And I think that this underscores the attacks that our community and our service face, and the need to keep on investing heavily in security.
Facebook says it does not yet know who is behind that attack. Stock fell 2.5% in today's session.
It is being called a wireless revolution. Verizon is ready to launch new wireless technology that could change the way we use the internet and watch TV. Julia Borston explains.
Verizon is launching the nation's first 5G wireless service, the 5th generation of cellular technology, starting October in Houston, Indianapolis, Los Angeles, and Sacramento. The new technology promises to match the speed of cable services and create real competition for cable companies. Verizon will charge $50 a month for the service and throw in a free Apple TV for new subscribers. Here's what Verizon CEO Hans Vestberg said about why it's so important for the future of content consumption.
When you talk about content, it's such a broad narrative. I mean, remember, when we usually talk about content, we talk about linear TV. But there are so many other content that is an interest of us. We need to be a little bit better explained when we talk about content that there are many other content that will be super important for 5G and for our customers in the future. Some we might create ourselves, like we have in the Yahoo asset. Some, of course, we're partnering with the best brands in the world.
AT&T is following with a 5G launch in a dozen cities this year, and T-Mobile is planning to create a national 5G network by 2020. As these telco giants prepare to face off with each other with new, faster offerings for consumers, the question is whether Verizon, AT&T, and others become a bigger threat to the cable and satellite companies and the 90 million households that pay them for broadband, phone, and TV. One thing that could help the cable companies, rainy weather can sometimes disrupt the 5G signal, and 5G will come with a huge price tag for telcos. The conversion will cost billions of dollars and require the companies to install tens of thousands of new antennas. New FCC Chair Ajit Pai says he wants to make sure the telcos can continue to invest in 5G technology.
The biggest barrier is the domestic regulatory barriers that we face. For example, it takes 1 to 2 hours to install a small cell on a utility pole that's necessary for 5G. In some cases, it can take a year or 2 years to get the regulatory approval for deploying that small cell.
Pai saying it's important that the U.S. remain the leader in 5G technology and not fall behind China. For Nightly Business Report, I'm Julie Borston in Los Angeles.
A Lionsgate and Amazon get together? That's where we begin tonight's Market Focus. Bloomberg has been reporting that one of the film studio's largest investors said that a new partnership between Lionsgate and Amazon could eventually lead to a potential merger. The shareholder also said that Verizon could be a potential suitor as well, although the telecom giant has previously said it was not interested in buying a traditional entertainment company. Nevertheless, Lionsgate shares popped more than 7% today to $24.39. Meanwhile, shares of Amazon and Verizon were both lower in today's trade. And the C-suite at JCPenney's looking pretty sparse, with the retailer saying its chief financial officer will step down October 1st to pursue another opportunity. The news comes just a few months after the retailer's CEO left abruptly to be the same job at Lowe's. Shares of JCPenney fell another 4% today to $1.66. And BlackBerry said that lower costs helped to offset weaker sales in its enterprise software and services business. As a result, both earnings and total revenue came in ahead of expectations. The tech company saw increased demand for its self-driving technology software, and it added as a result it plans to increase investments in that business. Shares rose more than 11% today to $11.38.
Vail Resorts reported a smaller than expected loss and weaker revenue in a quarter that's seasonally slow for the ski resort operator. The company said results for the past year suffered due to poor winter conditions, but added that it's encouraged by the strong season pass sales as it heads into its busy period. Shares were off 4% to $274.42. Honeywell said it is raising its quarterly dividend by 10% to 82 cents a share. The yield on the stock sits just under 2%. Shares of the conglomerate rose fractionally to $166.40. And the fast food chain Bojangles is reportedly considering selling itself. Reuters is reporting that the small cap company is exploring strategic alternatives and is working with Bank of America on the process. Shares of Bojangles jumped more than 12% on the news to $15.70.
Well, if your portfolio is up nicely this third quarter, our market monitor has some ideas on how to keep it going into the fourth. Joining us tonight, Shawn OHara is president of Pacer ETFs. This is his first time on Nightly Business Report. Shawn, good to see you. Welcome. Thanks for joining us tonight.
Thank you for having me.
You're looking for value going into the fourth quarter, and I'm going to start with your first pick tonight. It's Micron Technology. The chip stocks have suffered. And Micron this week had a pretty tough week as well. Why do you like it here?
Well, we like Micron technology because we like the harder side of tech as opposed to the softer side or the social side. We're overweight technology in several of our funds. And Micron, as a chip maker, we have this concept we call the four horsemen of the internet: artificial intelligence, autonomous vehicles, e-commerce, and streaming. And the demand for these chips will be increasing as those types of services increase as well. And they generate a lot of free cash flow. And it trades at a very, very low multiple.
You're not worried about pricing pressures. That seems to be the problem for a lot of the tech companies right now, the chip companies.
Yeah, I mean, there's a lot of competition. We own several of the chip makers, but the demand, I believe, over time should outstrip the pricing pressures because the demand, we believe, long-term is fairly significant.
Right.
Okay, number 2 is Equinix, which is kind of a bet on the cloud.
Yeah, Equinix is a publicly traded real estate company. When most people see companies like Amazon or Google or Microsoft talk about their cloud business, it's not really a cloud. It's actually a data center that they're generating revenue out of. Equinix is the largest data center operator in the United States. 70% of all internet traffic in the U.S. flows through one of their centers. And as these big behemoths compete and try to grow their cloud business, and this also feeds into the previous theme of the four horsemen, we believe the demand story here is very big as well.
Finally, a high-profile retailer, Nordstrom, they've had a tough year. They were for sale, then they weren't for sale. They're competing with companies that are going online. I mean, it's been a tough time for this company. Why do you like them now?
We own a specialty basket of retailers, which Nordstrom's in. We screened in because of their free cash flow. They generate a lot of free cash flow. I think as far as position versus other retailers, they had fewer stores, so they didn't have to take offline those stores and deal with that problem. They've crafted, we think, a pretty nice strategy here, a multi-channel strategy, which is in-store and online. And then Nordstrom's and Nordstrom's Rack, which is a discount operation, and they've cobbled together a nice loyalty program for those. And again, they generate a lot of free cash flow, and the management now is committed to buying back stock. So we look for Nordstrom to continue to perform like our other retail players.
All right, very good. Shawn, again, thanks for joining us tonight. Appreciate it.
Thank you.
Shawn OHara with Pacer ETFs, and you can read more about his picks on our website at nbr.com.
Coming up, will tariffs put the fast-growing e-bike business on a new track? Bain and KKR are reportedly creating a $20 million fund that will be used to pay severance to thousands of former Toys R Us workers. According to Dow Jones, the fund's creation by the toy store's private equity owners is an unusual move. A third party will help structure that fund.
Meanwhile, there are reports out tonight that Mexico's incoming president has spoken with Canada's prime minister about the ongoing efforts to redo the North American Free Trade Agreement. President-elect López Obrador said today he spoke on the phone with Prime Minister Justin Trudeau and told him he will insist that NAFTA remain a trilateral deal. At this point, as you know, only the U.S. and Mexico have reached a new agreement. The deadline for an agreement with Canada is this Sunday.
American households are optimistic about their personal finances. According to the latest reading from the University of Michigan's monthly survey, sentiment is near all-time highs. Expectations for improved personal finances are at the highest level since 2004. The survey showed that the only concern was about the impact of trade tariffs.
Speaking of which, tariffs are causing financial pain for startups in the fast-growing e-bikes industry. Aditi Roy is in Fountain View, California for us tonight.
Years ago, best friends Dom DiConstanzo and Terry Sherry started an electric bike company, Pedigo Bikes, just as e-bikes were starting to take off.
The last few years, we've grown anywhere from 20 to 50%.
Last year, Pedigo made $18.6 million in revenue, making the company one of the leaders in the fledgling e-bike industry, expected to grow from $17 billion now to a $24 billion market by 2025. But now the company and the industry are facing a major roadblock: tariffs.
How many components of this bike are made in China?
This bike is about probably 80% Chinese componentry.
The majority of electric bike parts come from China, where most e-bikes are also assembled.
In fact, perhaps the most important component in an e-bike is the throttle here. It allows me to go fast without working too hard. Don says virtually all throttles are made in China.
For Pedego, the 25% tariff on electric bikes add up to about $1 million this year.
The tariff was a big game changer for us. When we've been going around business fine for about 9 years, and all of a sudden we get, sideswiped by this whole tariff issue, and we had to figure out how to deal with it.
But when Don looked into the possibility of moving production to the U.S., he realized it was cost prohibitive. The average price of a Pedego e-bike is $3,000. Don says the tariff would raise the price to $3,750. Moving to the U.S. would have doubled the price. So the company chose to move production to Vietnam, where extra transit and labor costs still raise the average price by $300.
There will be a slight increase to the consumer, and that about balances what we believe it's going to cost us, but we really don't know until we get into full production.
Besides opening this new production center in Vietnam, the company's also shopping for parts in other countries. Pedego's newest bike only contains about 20% of parts from China.
Any component that we can get outside of China, we're going to source outside of China.
While Pedego doesn't expect its sales will be impacted by the trade tensions, one analyst tells us he expects U.S. sales of e-bikes to decline by at least 15% because of the tariffs, since nearly all electric bike companies are raising prices because of those duties. For Nightly Business Report, I'm Aditi Roy, Fountain Valley, California.
And before we go, here's a look at the third quarter's performance, and it was a good one. There were big gains for all of the averages. That'll do it for us tonight on Nightly Business Report. I'm Sue Herrera. Thanks for joining us.
Last trading day of September.
I know, can't believe it.
I'm Bill Griffith. Have a great weekend, everybody. We'll see you in October.